Hey traders, this is Christian from Tribeca Trade Group with a quick weekend video on a particular topic. So I'm just going to spend about 5 minutes on this. What I want to talk about is monthly option expiration. So this Friday, just passing, was November option expiration. So it's I think it's always a good idea to take a look at which positions that you had in terms of swing trades that expired worthless. Did you have a couple of them? Did you have a lot of them? Generally, for the swing trades, the if you have 0 to 1, I would say is you've traded pretty well, right? I mean, the more that you have that expired worthless, the more you probably had a tough month, I would say, or just had a difficult time making money with having your other positions balance out some of those losers, right? If those positions that you were trying to where you were not selling premium, where you were long premium, that expired worthless, right? That's a loss. So it's good to take a look at how many positions that you actually had expired worthless on Friday. If you had, let's say, more than a couple, I would say you did something wrong, right? Or you could improve your trading at the very least, right? So as we get to now that the November is essentially behind us for option expiration, now that we're on to December, I think right now what you want to do, as if you're trading options and if you're long premium, is to take a look at those positions that you have in your book that are December expiration. What are you doing with those positions? How much longer are you looking to hold them? And the reason why, and again, this is different if you're selling premium, right? If you're selling premium, then this will work to your advantage. So what I have here is just a quick chart of theta decay and how this works. I grabbed this from somebody's website, I think Quant Stack Exchange, which I don't even know. I just actually just Googled theta decay for options, and you can find a chart here. But regardless of who's posting it, it's the same principle no matter what. So this is how it works for options: 120 days to 90 days. Notice, the slope of the line is downward sloping, but the slope isn't that great. As you get closer, 90 days to 60 days, that slope starts to get greater. And then from 60 days, it really starts to pick up. And then 30 days to 0 days, it is really dramatic, right? So every day that you're holding at this point a December option, you're losing. Let's and all other factors being equal, price and so forth. If you were just holding, you're going to lose no matter what in front month, which is going to be December come Monday. No matter what, you're going to be losing money on those positions. Now, of course, there's other factors like price. You really need price to move in your favor. So that said, if you have those positions on, what you want to be doing right now is kind of going through and saying, either keep, kill your position, or get rid of it completely, or manage it, and maybe that consists of rolling it out, and so on and so forth. So it's a greater subject whenever we see option flow on the tape, whether or not you want to follow option flow or not, or structure your trade. If I basically use, and I've gone into a couple webinars where we've discussed this, but I use option activity, aggressive option activity, for trade ideas, right? But I don't always have to see. A lot of times we see very short dated calls, and sometimes they're repetitive, sometimes they're either in this case December, or sometimes they're weekly, or this week's coming expiration, or next week's, right? Those are going to move very, very quickly in terms of the value, depending on what the underlying does. But know this, this is a certain here, that the longer that you hold that position, the quicker that the time value, the more the time value is going to weigh on your position, and more that premium is going to depreciate very quickly, right? So I want to give you an example. It's better, I think it's always better to talk about examples rather than just say, hey, you should do this or you should do that. I have Western Digital calls on. I have a position that expires in December. So I'm going to want to have to manage that position. Now, I've already taken a couple targets. I put this trade on, I think, in here, and I've already taken two targets. So I'm already that much ahead of the game because I've taken half the trade off, and I'm trying to play for a big winner. And I have right now, I'll tell you right now, I have a 10 lot on of the December 92.5 call. So I'm really playing for a move up to 94. However, I have to be cognizant of this And I have to realize that with this position that I have on, I could lose the whole value. I think that the calls right now are marking a pretty decent amount. They're marking at 232, right? So to me, that is a trade that I should be managing. Now I've held it. I've held these Western Digital calls for probably a little over a week. I'm relying on memory, which is hazy right now, but I believe I've held it for about a week. And I had this nice bounce, which is where there was an announcement that caused Western Digital to go up, something about them and Toshiba. I can go into that, but it's not even important. The bottom line is I got a nice bounce where I took off half the position, but now I'm dealing with a pretty expensive position. This is a $2,300 position. We know that the theta is going to decay, and I'm trying to basically where I want to take this position off is a little bit above 94. But I think at this point I need to manage this position, and come Monday, I will either look to take off some of the position, or what I would really like to do is keep the position on. But I'll roll the position most likely out to January, maybe structure it more as a call spread, or even further out. Again, going back to this chart, you could see still for dealing with a position that's even 30 to 60 days out, you still are really fighting against the current here. All right, so I need to. That's the one position I believe I have on for December that I need to manage. Other than that, all my other positions are out further in options. But again, the reason why so that's an example that I need to do, that I need to restructure, because again, I'm going to be swimming upstream against the current if the position just stays here. God forbid the position starts to go against you. Now you're dealing with price moving against you, and you're dealing with time moving against you. So really, talk about current going against you. Now the winds, it's like a level 1 hurricane that is going against you as you're trying to swim. If the price moves against you as well. So even if the price stays here for a couple days, I'm going to be losing money, right? So this is really good to kind of go through an example. And while it's the beginning of the month for option, for the December options, or the new, not the beginning of December, but you know what I mean, the beginning of the option cycle, you can do things now to manage. Once you get to about a week out, it's too late. So again, this position that I have on it has a lot of value to it. It's $2.30. By the time, if it doesn't work and it goes down to 50 cents, it's too late, right? I mean, you've already lost in it. Hopefully this doesn't happen by Monday when I decide to restructure this trade. But let's say that I don't do anything and I wait and the position goes from 232 down to 50 cents. I've already lost the battle. Sure, I could structure it out and I can maybe do something that has a lower probability of working. But the more that I wait, and if the position happens to go down to 50 cents, I'm screwed, right? I mean, and again, Western Digital may not have done anything, in the next week, but just the value of the theta working against me could really cause me a big loss. So I think this gets lost sometimes on trading, and sometimes we get wrapped up in trading, putting on new positions, taking off some positions as well, and managing, watching the tape, looking for new ideas. But meanwhile, those positions that you have on are doing nothing but lose value if they don't start to accelerate to the upside. So I think you have a really good opportunity to do that now and structure these things out. The other thing, which again is a little bit bigger than this video, is I think a lot of people, when they see the option activity that goes up for December, they're looking for a big winner. And a lot of times that's not going to be the case. It's, you're going to get 20% profits on options, or 30 or 40%, which are great trades. But I think so many people keep their trades on for too long because they think just because there was calls bought, something magical is going to happen. More often than not, something magical does not happen. Those are the outliers. So I think I've kind of nailed home the point enough. But these are things that we go through the trading room. And again, I think it's a great opportunity to take a look at what you have now, especially for this month. We're going to have Thanksgiving, which is also one less day of market activity, one extra day of theta decay. All right, so thanks for watching the video. Have a great weekend, and hope to see you in the trading room. Thanks.